Hello and welcome to the American Compass podcast. My name is Oren. I am the chief economist at American Compass. And after 2 weeks of fighting on interviews, on podcasts, in every format about tariffs and trade deficits, I am very excited for this episode where we will be joined by my fellow warrior in this combat, American Compass policy advisor, Mark DiPlacido. We have war stories about the worst questions we've been asked. We will go through a draft of the worst arguments we've had to confront. And hopefully it will be an excellent primer for all of you who are out there having to listen to these arguments too, whether you are in the administration on Capitol Hill or simply looking to dominate the cocktail circuit. So stick around for that conversation, but first need to tell you about what is going on at Commonplace. It is, surprise yet more, on Liberation Day, the ongoing trade conflict and where to go from here. Terrific symposium we've been running for, going on 2 weeks now, and I think a couple of pieces this week were especially interesting. Fred Bauer had a great piece looking a little bit more broadly on how neoliberalism kind of broke Cold War internationalism and the way these things are more in conflict than simply a continuation of the same thinking. And Henry Gao, who, if you don't, you should be following him on Twitter. He has a lot of terrific analysis on what is actually happening behind all of these headlines about tariffs, threats, negotiations, and so forth, and wrote a really great piece for us on what needs to happen during this 90-day pause in the reciprocal tariffs, where the Trump administration should be focused, and what some of the more positive outcomes could look like. So check that out. And then finally, of course, subscribe to Understanding America. We are trying not to be all tariffs all the time. Had a fun piece up recently about elite institutions, been trying to think about sort of how to understand public opinion data, and also talking a lot about tariffs and wrapping up all the best things to be reading from around the web. So subscribe there. But right now, enjoy this conversation with Mark DiPlacido. And we are joined now by fellow American Compass tariff warrior and policy advisor, Mark DiPlacido. How are you, sir?
I'm doing great, Oren. Great to talk with you.
It is great to see you. I've been seeing you all over the media over the last 2 weeks doing yeoman's work, attempting to explain to people what tariffs are, why they are actually useful, and why free trade has not delivered the cornucopia of wonders that some may have heard about. And having been on a parallel tour myself, I can only assume you share some of the frustrations with the, let's politely say, least informed questions that may have been posed and least compelling arguments that you may have had to face down. And this is our airing of grievances. This is our chance to run through it all, and for listeners and viewers who don't spend their days watching us on TV to get a good overview of how things are going. So are you as excited as I am for this particular conversation?
I am excited. It's a good opportunity to sort of play it back, I think, and hopefully offer some helpful, just quick counters for people maybe on the Hill or just in general who have been fighting these same bad arguments. Hopefully it'll be a good opportunity to run through some of those.
Yeah, well, we have a refined listenership. Some are on the Hill, many are just on the cocktail circuit. And so wherever you find yourself, I'm sure you will find this helpful. But let's start here. I think it's fine. We were just talking about, one of the frustrations with the nature of the media ecosystem is some of these interviews go on very long. The interviewers are not very informed. And then you spend a lot of time explaining to them stuff that they then cut out of the interview when they realize how it sounded. But let's at least take a moment there. What is your favorite story of bizarre question you had to address that then landed on the cutting room floor?
Sure. So it was supposed to be a very quick radio hit, a few minutes. I ended up getting into a 20-minute debate. So a few selections were cut, but I think the probably the worst argument in the exchange I heard was that we don't need to make clothing and shoes like we did in the Northeast 200 years ago. We're making chips now, when obviously precisely that's not what we're making, and obviously the last administration pursued a whole independent effort to reshore chip making here. So The argument that basically the free trade regime has led to just a shift towards higher value manufacturing is obviously not borne out by reality.
Yeah, that's a good one. My favorite was we were talking about the market reaction, and we'll come back to the whole market argument later. But someone said to me, there's a big concern now that that one thing we're seeing is a renunciation or the end of American exceptionalism. And a big part of American exceptionalism, of course, has always been that the United States was the place where you could come and earn the highest profits. And I just looked at them and I said, honestly, I hear a lot of conversation about American exceptionalism. I believe in American exceptionalism. And the idea that what makes America exceptional is that it is the place where the profit margins are highest is simply not, not something I've ever heard or that I would expect to be what many Americans are proud to be preserving. So suffice to say that didn't make it in either. But shout out to all the pro-profit exceptionalists out there, I guess. What we are going to do now is an old-fashioned draft, picking our favorite arguments or least favorite arguments, I guess, that we have had to address and talk a little bit about how we address them. You are the guest of honor here on the American Compass podcast today, so I will give you the first pick.
Sure. I think probably the top for me is that the trade deficit doesn't matter, or yeah, that it's even maybe a good thing
Yeah,
because
it's a
we're getting stuff on the
solid
cheap.
pick. It's the Victor Wembanyama of bad trade arguments. But go ahead, say more.
Yeah, and I think it's probably important to address first because it attacks kind of the very basis of like addressing the issue at all, and letting this continue to really I guess spiral. So to sort of set the conversation, I think most of our viewers are probably familiar that the trade deficit rose from about 30 billion at the beginning of the 90s to about $1 trillion now. I think it's around 918 last year. Essentially, beyond just sounding like a big number, what does that mean? And the way I condense it, and maybe it's not 100% economists would quibble with it, is that we're basically consuming $1 trillion more now than we're producing. Obviously, some of the money that comes back is in greenfield investment and increasing in industrial capacity in the United States, but that typically in a given year represents less than 5% or less than 10% of the money that's coming back into the country. And so what we're doing then is buying these goods on credit, whether it's selling government debt or corporate debt, or whether it's these foreign countries and foreign investors purchasing our assets in the form of corporate equity and stocks, real estate, intellectual property, these other dollar-denominated assets. So we're not getting these goods for free, right? And it's usually the same libertarian economists who said there is no free lunch when it comes to maybe things like government spending. But for whatever reason, when trade is concerned, we totally look the other direction and on the deficit.
Yeah, it's a great point that you hear the answer is no, this is good because, quote, people are investing in America. And you'd say if people were actually investing in America, that would be great. But to your point, if they're just acquiring our stuff and even more so our debt, it's a little bit like saying every time you open up a new credit card and run up, the full balance, that shows Visa investing in you. And I guess in the short run, you do get the stuff, but it was Warren Buffett who pointed out back, this was just when this was getting started, I think in 2003, he wrote a really interesting piece for CNN lamenting the start of the real explosion of the trade deficit, making the point that it's a double harm because it both hollows out our industrial capacity today, stuff that we could be making and developing capacity for, we don't. And it harms us in the future. It mortgages the future by either committing to pay more or giving away those claims on the future economic output. Have you encountered the even more extreme form of this that not only are imports a good thing because that's stuff that exports are actively a bad thing, that exports are just the unfortunate thing we have to do to get all the wonderful imports?
I think maybe not directly in those terms, but I think there's a general horror at the thought of producing things in America again, especially, things maybe at the lower value side that just despite not being exciting robots are still things that we use every day and purchase every day in America. And I think maybe we'll get to that in a later question, but it's just the basic needs of human beings don't fundamentally change. We still need shelter, clothing, food, defense. These essential civilizational components, and the thought that it's somehow outdated or outmoded to want to produce those things here, I think is a little baffling to me.
Yeah.
At least posture wise. And one more thing I would add on the deficit point as well, right, is that those assets, they earn interest or appreciation when more and more of those are going to foreign investors rather than American investors. Like they're getting all of the benefit of those assets and those investments. And another thing I point out to people, most people are familiar with the deficit, right? The annual amount that we spend more than we take in revenue, and how that accumulates into a national debt. On the trade deficit side, we have the annual number, and then we have something called the net foreign asset position, which is basically how many American assets are owned by foreign investors versus how many foreign assets are owned by Americans. That number has now reached over $24 trillion. So when Warren Buffett wrote that article back in 2003, that net foreign asset position was only negative $3 trillion. So we're an order of magnitude higher now, and it's only getting worse.
Yeah, it's interesting. There's a fine line between celebrating their investing in us and maybe being a little more concerned they own us.
Yeah.
Which are two sides of the same coin. All right, my turn. My first pick is another of the kind of very foundational ones. It is the simple argument that, well, obviously this has been great because GDP went up. And you see this has been a very popular sort of social media meme. American Compass makes the point, I've made the point in my statements that, the last 25 years of hyper-globalization, free trade with China, have been a disaster for the American economy in various ways for working families. And the response is to just post a chart of GDP. And not even, sometimes not even US GDP, just global GDP. And just say, well, look at how much GDP, look how much higher GDP is. How can you possibly say this wasn't a great success? And it's striking the number of levels this is on which this is a terrible argument. One, of course, is just that GDP isn't the only thing that matters or necessarily a good measure of, how well America or a given family, a typical family is doing. Obviously, you can go down to GDP per capita, but you have the same problem, which is you're making the exact mistake that economists have made all along in these analyses, which is to look at the aggregate and ignore the distribution. But then even if you were to sort of try to come up with a more precise economic measure, you would still have the problem that correlation is obviously not causation. And, if you actually look at what has been happening to GDP, yes, of course, it's been going up. It's not clear how or why you would attribute that to free trade. And in fact, if you look at that rate of growth, you find the opposite. You find that the rate of growth certainly in the US economy was much higher in the middle of the last century when we had much lower levels of trade. And in fact, as we've pursued this ever more aggressive globalization, the growth rate has fallen. Now, we've talked a lot about how in the manufacturing sector, productivity has even turned negative. And the punchline, which I really love, is if you actually respond and you say like, well, I don't know if that's a good argument. It looks to me like the growth rate is going down. The response will immediately be, oh, well, that's not helpful. Correlation isn't causation. And you just sort of throw up your hands and say, yeah, I know, but that's the point. That's why this is a terrible way to analyze this situation.
Right.
Have you seen any sort of have you faced any more compelling arguments that no, here's how here's the actual evidence that this has been economically beneficial, this approach?
No, I mean, so this is really how I was even introduced to this issue in the first place, right? Because, back in 2015 when I got to DC, we were coming out of the Great Recession, right? And everybody was trying to figure out why we can't get back to the 3% number that all of the candidates back then at least promised or wanted to get to, right? And you dive deeper into the numbers, and it's like, oh, well, productivity has slowed down, and it's like, okay, well, how has productivity slowed down? Well, investments slowed down. Well, how could that be the case when we have such a financialized economy? And then you realize the types of things that companies are investing in now is just circling at pushing assets around in a circle rather than investing in manufacturing. And obviously manufacturing has the highest return on R&D, on productivity advances, and so you have a smaller and smaller share of the economy that's driving that productivity increase. Now, you can increase the overall number, right? And we've, I guess, increased, the population at the same time. None of that is getting us over that 3% hurdle, at least for the last 20 years. Also, I haven't heard anybody make this argument explicitly recently, but the way I learned, I think, in Econ 101 to calculate GDP, part of that calculation is exports minus imports, right? So we have to get over that trillion-dollar hurdle just to start getting in the green in the first place when we're thinking about GDP. Is that not correct?
Yeah, that's right. I think the GDP numbers that they're sort of posting do take that into account. If you were to look at how much we're consuming, it's rising even faster because we
Right.
have not only GDP, but to your point at the outset, this now overhang of consumption for which we're not producing. And so I think, that's the honest version of this argument isn't, well, look how GDP, look how much higher GDP is. The honest version of the argument is just, well, look how much more stuff we have. And there, I think, yeah, it's fair to say that, at least in a static analysis, having free trade and importing massive amounts of cheap stuff does mean we have more cheap stuff. One thing I think is still a problem there, and this is a funny quirk for economists generally, is that when economists want to make the case that you have to take the long view of something and think about all of the dynamic effects, they of course reject the short-term immediate impact and say no, you have to play this way down the road and think about how it'll look once everything balances out. But when they really just want to sell free trade, they throw that out the window and just say, well, look, at this exact moment, how much more stuff you have than if we shut off free trade at this exact moment. When the real question, exactly to your point about the 2015 question, is okay, but over time, which model is going to generate a more prosperous and productive economy? One in which we hollow things out, mortgage the future, discourage domestic investment, and just run up the credit card, or one in which we actually reward efforts to make people in our own country more productive. And obviously, I guess maybe our view of that differs from what a lot of economists are putting out, but I think it's probably a lot closer to the truth.
No, and one that offers a broad swath of our population a real stake in the economy, right? I think this is maybe another example or candidate for worst argument ever is people don't want to work in factories, they want to work at Goldman Sachs, or they want to work in investment banking. And there's really no consideration there of sort of the distribution of interests, skill sets, and capacity that different parts of our population have. And I think the key is to have an economy that utilizes all of our productive capacity, and that rewards people, not just the third of our population with a college degree, but the 2/3 also that don't have a college degree, with something more than hustling a few different gig economy jobs and trying to set up a stable enough schedule and income to start the life that they want, whether it's owning a home or raising a family or, the parts of the American dream that we've historically recognized everybody should be able to expect to have.
Yeah, yeah, this is a great one. So I'm making that your pick, whether you wanted it to be or not. The because it's come up in a number of contexts. I feel like one is like you said this, like, well, like, nobody wants to work in a factory, no one should work in a factory, and you connected this earlier to this idea that, like, well, making less sophisticated goods is somehow menial, or unrewarding work that we shouldn't do. And it has fascinated me just how little understanding people seem to have, first of all, about modern manufacturing. Like, there's this weird idea that the sophistication of the final product must be precisely correlated with the sophistication of the manufacturing process and the quality of the job. When in fact that's not true at all. I mean, just one obvious quintessential example of this is energy production, where like fracking and like natural gas, that's it is literally a commodity, but is obviously a very sophisticated process that provides a lot of highly productive value add job opportunities. The same can be true for t-shirts. If you are automating the t-shirt making process, if you are doing advanced fabrics and all sorts of work that is going on in the textile industry. I would add a related point also, which is that I think a lot of people don't appreciate how much value add there is there. And this is something I ran into looking at a piece that Fareed Zakaria had written, where he tried to use the example that, we don't want to be doing making sneakers. We want people working in, digital services and marketing associated with sneakers. And he tried to point out that, making the actual manufacture of the sneaker is like $25 of what is then $100 sneaker. And it just showed that he knew absolutely nothing about the sneaker industry. Because if you actually go and look at it, taking Nike as an example, if you're paying $100 for the sneaker as the retail price, the price that Nike gets for that is like $50. And of course, they need to make some profit on that. And so when you actually then break down the making of the sneaker, it turns out there's actually more value add in the sneaker manufacturing and getting it to the US than there is in all of Nike's operating of its business and marketing and technology and design and everything else that it does. So even just on the apples to apples level, it's wrong. And then I guess I will make my next draft pick the related point that, well, service jobs are better than manufacturing jobs. And I've seen a lot of people just sort of look at, average wage in services versus average wage in manufacturing and try to make that point. And the problem, of course, is that this is not an apples to apples comparison. The same worker is not choosing between the average services job, which is skewed much higher by the very high end work in some parts of our economy, or a manufacturing job. If you actually compare like for like, the service job that someone who might otherwise work in manufacturing is likely to find themselves in is definitely a lower quality job. And, we did an interesting podcast with David Otter, who's a lead author on a lot of the China shock research, about a new paper that he did that highlighted exactly this point, that this idea that, well, free trade and moving the manufacturing jobs to China is great because of the better jobs that replace it. It is true that other new jobs appear in the economy. It's not true that the people who lost the manufacturing jobs get those jobs. And so, while obviously our economy has seen lots of opportunity created for people at the top, the options available to people in the middle and toward the bottom have really, in a lot of ways, and particularly in the manufacturing context, gotten a lot worse.
Yeah, absolutely. I think, going briefly back to the Nike example, right? I think the fact that so much of our economy now is tied to these rents that these major multinational corporations get just on their logo alone, right? And the argument that we're supposed to somehow be sympathetic to these companies because, it would be a burden to them to actually do production in our own country and with the labor that we have available here, or a more productive alternative through a more automated production process. That's when we're thinking, I think going forward, right, the framework shift that we're seeing here is that American companies should be American, right? Like you have some obligation to the rest of the country to build the brand here. And of course, we've seen how that's translated into an adoption of Chinese values over American values, right? Nike is one of those companies that is most ready to criticize America and American culture, but would never say anything critical of China because of, frankly, the slave labor that they use there. Another thing on the services sector, I think to keep in mind, and you made this point recently, on one of your interviews, is that when we're talking about low wage jobs, right? And this is another argument I've encountered in some of these interviews is, do we really want to bring back these jobs that pay only $3,000 a year in Vietnam to America, right? Are these really the kinds of jobs that we want? And of course, the argument is not that we need low wage jobs. It's that they're only low wage in a system that facilitates this kind of trade deficit if there's labor arbitrage going on, right? Because it aligns completely the question of productivity, right? If American workers can make 100 times more T-shirts in an hour than workers that are being paid $1 versus $100, right? There's a question of productivity there that okay, Americans can make these a lot more productively, so they should get a higher wage here. Simply using wages because they're low doesn't necessarily mean that the product even is being made most productively, and there's ultimately a trade-off in growth there.
Yeah. Well, that's the IP point actually is a really interesting one that I hadn't thought about as much. And Julius Krein has made this point really well. I think it's a very good essay in American Affairs about this, that essentially what you see corporations in a financialized economy doing is separating out the kind of rent-seeking, IP-heavy, very capital-light elements from the capital-intensive production side, and just dumping the latter because the return profile on the former is so much higher. And if all our economy optimizes for is, what return can you get on your capital, that's what people are going to try to do. And it strikes me that, one of these other problems with the sort of quite static approach that economists have taken, where they just say, well, as you can see, we now have these other high quality jobs, is that there's a really interesting question. What sorts of jobs would we have if we had kept production here? Because there's no reason to believe that you wouldn't have still seen development of high quality jobs for highly educated, highly productive workers. They just would have been much more likely to be connected to actual production processes. That is, you might have fewer jobs at Nike creating social media apps to, encourage people to buy yet more versions of the same sneaker. But if that was because instead what those people were doing were optimizing new path-breaking production technologies, that might be a much better allocation of labor. The idea that the market under the current set of incentives is allocating labor most productively anywhere in the labor market isn't necessarily the case. And what we are in fact seeing based on the allocation that we've got in the market is, first of all, a real failure to get productivity growth. And also now this related process where we don't train engineers anymore. I was when I was at the American Economic Association's annual conference talking about all of these trade policy issues, and Kim Clausing, who's an economist at the Peterson Institute, was saying, well, you have to use a general equilibrium model that accounts for, after everything has settled into its new place and things are more efficient, what's the benefit? I said, like, well, does your general equilibrium model account for what types of education and careers people pursue? And of course, the answer was no, because these models account for none of these things. And then you get to the situation we're in now where people say, oh, well, you can't bring the stuff back because we don't have any engineers. And it's like, well, no freaking kidding. Whose fault is that? And of course it's going to be hard, but I don't think that means that you don't do it. All right, it's your draft pick again. I got the service jobs are better than the manufacturing jobs.
No, that's a great point. I think next maybe we talk a little bit about comparative advantage. I think coming off of that last discussion, there's definitely that there's a conflation of comparative advantage and cheap labor, right?
Let me pause you. Let me pause there. Do you have a PhD in economics?
I no, I don't.
Okay, are you sure you are qualified to continue discussing comparative advantage on this podcast?
I, I you would think that I'm not, and we've seen this on a lot of different topics in American discourse, unfortunately, over the last 5 or 10 years. I think it's just people can use logic without a PhD. I think it's possible.
In fact, one might even observe an inverse correlation between those those two facets. Please proceed.
Yes. So comparative advantage, right, is the idea that some countries make what they're good at, and they trade with countries that are good at making other stuff, and then there's a mutual advantage there. I think that argument sort of goes away when you have this yawning trade deficit year after year, right? And it ties to some of the arguments we've made already. I think the most obvious would be this previous argument that we can focus on higher value manufacturing now and let other countries do the low value stuff. If we would have seen just all of our textiles offshore, but we're selling a lot more, computers or robots or manufacturing equipment in their place, right? That could potentially be a good trade-off, right? But that's not what we're seeing at all, right? Within the larger trade deficit, we've seen also with advanced technology manufacturing a swing from a $40 billion surplus in the early 90s to a $300 billion deficit last year. So it's again, it's not just these low value goods that we're losing the whole capacity, right? And so there is no goods that we're trading for other goods. We're just trading our assets and we're trading and buying the goods on credit.
Yeah, I think this is a really important point that it is shocking to me that economists don't concede, because frankly they could probably almost construct a better argument if they would concede this, that whatever is going on is not the actual model that they teach is the way that trade is supposed to work. As you said, I mean, one of the fascinating things about comparative advantage that makes it interesting is that the basic models do show that, even if you're in absolute terms better at making everything than some other country, there's still an opportunity for trade, because comparatively, there will be something that they are more or less efficient in. And it makes more sense for them to focus where they're more efficient, and you to focus where comparatively you're more efficient. And that's a cool insight. And you can imagine all sorts of situations where that's useful, and whether in, people always point out in even, personal contexts, you could have an economist who could both do economics and manage their scheduling better than somebody else, but it might still make sense for them to focus on economics and hire someone else to handle their scheduling. And that's great. That's certainly true. It does not in any way extend to, well, let's say you have some other country that uses its policy to get better at all the most valuable stuff, and then not trade with you for anything that you make, but instead trade with you for your assets, what do you think? I mean, you can discuss on the merits, is that good or bad, but you can't sell it as a comparative advantage. That's just not what's going on anymore.
No, and to your point, there's clearly sectors, right, that many countries have targeted. I mean, China has their 10 policies under Made in China 2025, but looking at Taiwan, as you pointed out before, like there's no reason that some island country in the Pacific Ocean should have a comparative advantage for making semiconductors, right? And so much of the higher value added part of the economy now is in engineering and advanced manufacturing. And to the extent that there's a comparative advantage, is that these countries have made the investments, both in the production capacity, but also in the workforce, to have people who are educated and ready to take these jobs and lead the industries into the future. So when we're thinking about the overall desirability of these changes to the trade policy of the United States, it's about recognizing the long-term vision of the desirability of these industries and the desirability of our capacity to produce these advanced goods in the future. And that's going to change the incentive structure in the entire economy, hopefully, so that instead of businesses lobbying government to ignore the tax havens and continue to just lower their rates, maybe the businesses will start to worry about fixing the education system. Maybe businesses will start to worry about the issues in our local economy again. And there will be a recognition that, like, we all have to be together in this effort to make the industry stronger here and to get productivity and growth back on track, and that simply offshoring isn't going to be a solution.
Yeah, it's a great point about incentives. It's one thing. We've actually seen a great example of this in just the past year, really, where, big tech, you know, Google, Meta, Microsoft, and so forth, for a couple of decades now have, essentially been in a position where their profitability was tied entirely toward, hiring the very highest quality engineering talent. And so, they were lobbying aggressively for H-1B visas and other provisions to just get access to that particular type of talent. As the focus on AI has led to a focus on building out data centers and realizing that actually, guess what? The physical economy is important to the future of your business also. Training electricians has suddenly become a huge priority for them. And you're now seeing them actively think about and grapple with and push for, how do we actually train more tradespeople and how do we get involved in that? Brad Smith, who's the president of Microsoft, wrote an op-ed for Fox News talking about how important it was to invest more in developing trade skills. And that's exactly that, it goes to your point earlier about kind of the responsibility of American companies. And I think it's sort of fundamentally a solidarity within the United States that all of this, our market democracy, only works if the best ways to earn a lot of money are somehow connected to caring about the productivity and outcomes for the typical worker. Yeah. All right, I get one more draft pick. I would like to take my favorite Twitter war of the moment. Share of manufacturing employment will always decline, which honestly, I'm having, people don't have to believe this, but it is true. I always try to assume that people are arguing in good faith and really think the points they're making are good and important ones. And I struggle with that on this one, because you look at what happened to manufacturing employment after the year 2000, just look at the chart and it falls off a cliff. And the response that people make is that doesn't matter, because if you look at employment, manufacturing employment as a share of total employment, that has always been declining, since the 1940s or 50s. And I guess I would say two things about it. I'm curious, if nothing else, as an observer of this stat, what you make of it. the two things I think are really important are, first of all, like these points are not inconsistent. I don't know of anyone who's arguing that manufacturing employment as a share of total employment is declining or shouldn't be declining. Like that's an entirely natural and healthy element of a developing economy and rising prosperity, especially if you're getting ever more productivity within the manufacturing sector. There's nothing inconsistent with having that decline, but also still having steady employment, rising productivity, rising output in a healthy manufacturing sector. And of course, we had that for a long time. So there's the thing that didn't change at all, which is, yes, this declines as a share of output or as a share of employment. And the thing that did change, which was, yes, you can do that with a healthy industrial base and lots of manufacturing employment, or no, you have a problem when it is happening in a way that collapses your industrial base and your manufacturing employment.
Yeah.
And so I don't know why people think saying, well, the share has always been declining is somehow an answer to that. And then the second question is, I don't know why the share in employment would be the more important measure. Like, I don't know who, if you think about all the reasons we do care about manufacturing, whether it is for jobs in communities, for the strength of the economy, for national security and resilience, and you then were to say all the things that you're worried about based on recent trends, I just don't know how it's responsive to any of them to say, well, let's take a look at manufacturing employment as a share of total employment. It seems like a total non sequitur. And so I am baffled, and I turn to you to reinforce that bafflement or make some sense of the situation.
Sure. I guess in the sense that we would argue, manufacturing jobs are a better fit for a lot of the middle class, and the middle class being sort of a static statistic. Maybe we'd like to see a higher percentage of the population employed in manufacturing than I think, 8% or 9% now. But I think the overall point, right, is that it's fine if that share is declining because we're seeing increases in productivity and we maintain or increase output. But as we've stated other places, right, productivity has basically flatlined. And the argument I guess I would make on the other side is these same people will then argue, oh, but we have more manufacturing output than we've ever had, ignoring the fact that increase has basically been about 10% from 2000 to 2020 versus a 94% increase from 1980 to 2000 in the previous 20 years. When you exclude this mismeasured, semiconductors, which include output for increased processing speed, regardless of what that processing speed is really being used for, right? That number goes into the negative. And so they'll use the overall, they'll use the gross number on the output side instead of the rate of increase, but they'll use the other on the job side, which I don't think makes sense.
Yeah.
I think the more relevant number for me is like, what is our manufacturing output versus as a share of the world's, right? And I think right now it's about 16%. China's has risen from 3%, I think, in the early 90s to about 28% and is on track to hit 45% by 2030. We're going to decline further to 11% by 2030. So, if there is still a global desire for manufacturing and there's still global demand for manufacturing, I think it's reasonable to argue we should maybe be have a share of it that closer matches our GDP to the world, which I think is closer to 25%. Maybe that's a bit of a better target than just letting it all flow overseas.
Yeah. That's such a great point about the sort of the share versus the total, because you're exactly right that it's the exact same people who say, well, look, all we care about is, manufacturing's share of employment is always going to decline. That's all that matters. And then turn around and say, and our manufacturing sector is totally healthy because gross output has stayed flat, rather than realizing that staying flat in the context of everything else going on is is in fact a sign of incredible weakness. And so, you almost kind of have these two sets of data that you could look at, right? You could say, well, if I wanted to tell a story of how everything's fine in manufacturing, I would say, well, look, the share of employment is just always declining and total output is flat and that's all fine. And the other way to look at it would be to say, wait a minute, output in this sector has completely diverged from what's going on in the economy generally, and employment collapsed, and that doesn't sound very good. And I guess, to some extent, this is a case of, well, choose your statistics, but it isn't really, because the
Right.
question is, well, okay, but what is the thing you actually care about? And what do you think is the better indicator of a healthy manufacturing sector? And it seems to me that the one that has stalled out and seen manufacturing collapse is the narrative that describes what has actually happened, not, well, we're on some steady course that we've always been on. Because in both elements, we saw this incredible inflection point in the early 2000s and are now dealing with the fallout from it.
Right, and productivity has flatlined or decreased, right? So it takes more hours to produce the same amount of goods that it did before. I think that's, you don't really have to look much further than that to see that our economy isn't healthy, or at least the manufacturing sector isn't healthy.
Yeah. All right. Well, we are at the end of the first round. Folks can tune in to ESPN 8, the Ocho, if they want to see the second round picks tomorrow. Any other honorary mentions, laments, things you need to get off your chest?
I think that's a good first round, Oren.
All right. Well, then we will leave it there. Thank you, Mark. Thank you, listeners. And we will be back again soon with another episode of the American Compass podcast.